Good morning. It's Jeffrey Christian of CPM Group. It's a little after 11 o'clock on Tuesday, the 26th of November, here in New York. I want to talk about gold, silver, platinum. Several topics to talk about this week. Update you on Comex and Nymex open interest. I will point out that we will not have a video on Friday. CPM Group traditionally takes the Friday after Thanksgiving off. So we'll be back next week. We'll talk a little bit about the economic outlook and tariffs. And tariffs have come into the news because Mr. Trump and some of his people are talking about tariffs of 200% here and 80% there, and 25% tariffs as of day one on imports from Mexico and Canada. In his defense, Trump has said that he doesn't really have any numbers in mind for tariffs. He has gotten it into his head recently during the campaign that tariffs are good. He just picks numbers out. He's at random, he said, to scare people. That said, be careful what you say because somebody might hold you up to it. The Kremlin issued a statement yesterday saying that Mr. Trump promised to force the Ukrainian government to settle for a land grab on day one, and the Kremlin is holding him to his promise. I doubt they'll release any videos if he fails to live up to that promise, but it's out there. Tariffs are bad. They are inflationary, and they cause a reduction in economic activity. They raise the prices, they raise interest rates, they reduce economic growth, they hurt most people and companies. And it's very reminiscent because in 1929, the United States and the world went into the Great Depression. And in 1930, the Republican president and Republican Congress enacted the Tariff Act of 1930, which is commonly known as the Smoot-Hawley Act. And it raised taxes on tariffs on something like 20,000 imported goods, agricultural goods, foodstuffs, equipment, manufactured products, manufacturing equipment, all sorts of stuff. Tariffs went up about 40 to 60%. Other governments retaliated, and Smoot-Hawley and the retaliatory tariffs are generally credited with deepening the severity of the recession, of the Great Depression. They caused a 67% decline in U.S. trade, both imports and exports. Tariffs are bad, and we should understand that. Now, this chart is CPM Group's 10-year projections for real GDP on a global basis. And then, the little blue line on the bottom is advanced economies. The darker blue line on the top are emerging and developing countries. And the golden line in the middle is the U.S. real GDP. We update our economic projections, 10-year projections, on a quarterly basis. We've been using this chart at this time of year, end of the year, beginning of the new year. We do a lot of work with clients, institutional investors, mining companies, government agencies, anybody who is interested on our, what we call a deep dive on our outlook for the world economy and political environment, and then gold, silver, platinum, base metals, palladium, specialty metals, whatever the client's particular interested. And this chart we've been using for the last month or so. It contains our latest update, which was made in early October, late September, early October. We will be revising this hopefully yet this year. We've been delayed in updating our projections, our 10-year projections for the economy, gold and silver, by exigencies of the market. But you can see here, we have continued to talk about there being a potential for a significant recession 2025, 2026. We were saying 2024, 2025 was second half of 2024, 2025. Economic activity has been much better than we had expected, but there are still growing signs of a potential recession at some point in the next 24 months. And we have also said since the election that it's too early to say what the impact on the economy will be of a Trump administration. And we say that because the Trump comments have been internally inconsistent. They've said some things that are negative for economic activity and some things that are positive and stimulative for economic activity, and you don't know which way they're going to go. They're talking about cutting $2 trillion in federal spending. That would probably bring that, and they're talking about getting rid of the $40 billion a year Department of Education. They're talking about 25% tariffs on Mexico and Canada. They're talking about 80% or whatever tariffs on China. They're talking about a lot of things that would be extremely contractionary and would probably make a recession much more severe and bring it forward in time. So it would happen sooner and it would be worse, just like Smoot-Hawley did back in 1930 through 1932, 33, also known as the Great Depression. So it's very concerning. That's one of the things. But as I said, it's still too early to tell because Mr. Trump and his associates often say things that they don't even try to do, let alone succeed in doing. You don't know what they're going to try to do. You don't know what they're going to succeed at doing. You don't know what the Congress is going to be doing. He's talking about slashing Social Security payments for 30 or 75% of the recipients. You know, there are probably a lot of people in Congress, even Republicans, who would say, gee, that's going to cost me re-election in 2026. I don't think I'm going to support that. It's just too early. And then there are all of the actors that have a say in the world beyond the U.S. presidency and Congress. So it's just too early to say how it's going to be, but there is a heightened uncertainty. That heightened uncertainty factors importantly into gold and silver, as well as platinum and palladium. Talk about them in a little bit. I wanted to go back to December. I used a table last week in a video, which was the top part of this table. It showed open interest and inventories in the Comex gold and silver and Nymex platinum and palladium contracts. Silver, gold, and palladium all have active December contracts. They become deliverable at the end of this week. Thursday is Thanksgiving. The exchanges are closed. Friday, I believe the exchanges are open a little bit, like half day or something. We will be closed, but as a lot of other people will be out. But you have the December futures contracts rolling forward into future months. And that can sometimes have an effect of spiking prices for a day or two. That's what happened when silver went from $32 at the beginning of April 2011 to $50 on the last day of April. You looked and you didn't see a lot of people buying physical silver. You actually saw silver ETF investors selling their silver, taking advantage of that increase in prices. What you did see that pushed prices from $32 at the beginning of April 2011 to $50 at the end was more than $300 million of May Comex open interest in the May silver contract. And that was being bought back and then rolled forward into the July contract. That pushed the silver price from $32 at the beginning of April to $50. And once that was over at the end of April, first trading day of May, the price fell. And within 5 days, it was $35, $32 again. Right? So it can have the effect of pushing the price up. Now, last Thursday, you had 268 million ounces of open interest in the December Comex silver contract. It's down to 196 as of yesterday. That's like, what, 3 trading days? That's a 27% decline in 3 trading days. And then you can see that the amount of inventories really hasn't changed. In total, it's off 0.2%. Registered inventories have risen 12%. Some of that came from the eligible inventories, which fell 3.8%. But if you look at it in terms of ounces, there was 8,349 ounces increase in the COMEX registered and an 8,990 ounce decrease in eligible. So there's been a shift between registered and eligible. There are not a lot, 8 million ounces of people who are saying, I am short December. I will plan to deliver inventories that I have against those short positions. And the longs will be responsible for taking it unless they get rid of their long positions before the Comex clearinghouse assigns delivery to them, which is the system. The shorts in futures around the world, the shorts initiate the delivery period. And these are not physical deliveries. These are deliveries of depository receipts backed by physical metal. So the shorts go to the clearinghouse and say, we're short December. We're going to deliver into it. Here are our warehouse receipts if they don't already have them. The clearinghouse randomly assigns those delivery notices to people or entities that are long for that December contract. Then the longs, if they still have a long position, they had 24 hours where they can redeliver it, or they have to pony up 100% of the value, having probably only put up 10 or 15% margin prior to that when they were trading. So that's the delivery process. And we probably will see a sharp decrease in silver open interest today, tomorrow, into Friday, and possibly into early December. In fact, silver prices, as we're looking at it, are up 28 cents at $30.52. Part of the upward pressure on prices today probably are some of those shorts buying back their December contracts and then rolling them forward into the first quarter of next year. In gold, you had 19 million ounces of open interest in the December contract last Thursday. And as of Monday, you had 13 million ounces. So you've seen a 30%, 31% decline in the open interest in the December gold futures contract. And very little change, again, negative 0.1% decline in total inventories, and something of a decline in both eligible and registered stocks. Palladium, pretty much no change. It's more of an industrial metal. Platinum, you have a January active contract, so the December delivery doesn't really necessarily apply to platinum. But it's something to pay attention to. And it's something to pay attention to when you say, well, what might happen to gold and silver prices over the next few days? Prices have fluctuated sharply. They reached record high gold price and a very high price of silver, $35 an ounce, at the 30th of October, 31st of October. They've come off, they bounced back up, they've come back off, they're bouncing around sharply. We wouldn't be surprised to see gold and silver prices jump over the next 3 to 5 trading days and then come back off. We do think that gold is finding a good amount of support around $2,550. And we do think that silver has found support around $30, although we have been saying to our clients that we wouldn't be surprised to see support around $29.50, a little bit lower than the $30 that we've seen over the last 3 weeks. And on the upside, we still think that prices will rise after this, after a potential pullback in early December. And we think that prices will rise into January, if not February and March, into the first quarter because of the heightened uncertainty economically and politically. Platinum and palladium have not been making new highs. In fact, they've been moving pretty much sideways. And that reflects the fact that these are industrial metals. People are not pouring into platinum and palladium to protect themselves against economic and political chaos. Platinum and palladium have as their major use auto catalysts. The auto industry continues to see an increased market share in electric vehicles, battery electric vehicles, about 14% of the vehicles being manufactured and sold globally this year are battery electric vehicles that don't use platinum, palladium, and rhodium in their catalysts. So you're seeing some downward pressure on fabrication demand, and you're seeing investors saying, okay, these are markets that are industrially driven, and perhaps the industrial outlook is not all that great. And if Mr. Trump wants to impose tariffs on vehicles being imported into the United States from around the world, as well as vehicle components, that's probably not a very positive thing for platinum and palladium. And that's being reflected in the fact that the price are basically moving sideways, down significantly from where they were in the case of platinum in 2007 through 2011, 12, and in palladium since around 2018, 2016. One last chart for all those folks who keep saying that the world is going to start dumping dollars. Maybe it will at some point as the price, the exchange rate of the US dollar reaches the highest level that it's been in many years. This only goes back to 2008. Sorry about that. So the dollar is showing some strength. It's not showing strength because of expectations that the U.S. economy is going to be doing well. It's showing strength because when investors are worried about the state of the world and the state of their own environment and wealth, they race to gold, to silver, and to the U.S. dollar. And the fact that gold prices and silver prices and the US dollar are rising sharply right now is an indication of the extent to which investors around the world are worried about what comes in 2025. On that happy note, I wish our American listeners a happy Thanksgiving. I remember in the early 80s when I was doing a lot of work in London, I was surprised to see that England, or at least London, celebrated Thanksgiving because they had gotten rid of us. Happy Thanksgiving. Take care of yourselves. Be good to each other. Be good to people around you. Try to do something good for the world. Give thanks for what you've got. Hope for the best. Expect the worst. And we'll talk to you next week.